André, as you guys know, he's our in-house harmonics expert, and I love looking at his charts. It's like pure art because it's like, you know, it's like stuff that I can't see. So I love listening to André. So André, what do you see?
Well, can you see my screen? I'm not sure which one I shared, the MetaTrader or TradingView.
Pound US dollar, TradingView.
Pound US dollar. Great. Let me just change my screens here. And I need to change to my left screen. How can I change this?
Oh, I see all the little charts now.
No, I need to change my.
Oh, it says
the other monitor. So
it stop sharing and then reshare the other monitor.
But if I click that button again, it will show the same monitor. It doesn't give me an option to select the monitor.
Or what you can do is you can actually drag your chart.
Yeah, I can drag, but just because I have some notifications on this main screen, and I want to avoid that, but no issues. So pound versus dollar, as you mentioned before.
Wait, we don't see your screen right now.
You don't see?
No, we don't see any screen.
Now you can see.
Now we see the little charts. Yes. Now we see.
Okay. There we go. There we go.
Pound versus dollar, correct?
Correct.
Yeah.
Okay. So this is the bearish pattern that I shared among the community, the ForexAnalytix. For those who are familiar with this chart, you are already synced with what I'm thinking about. We can see the pound has found some support at the 50% retracement from the weekly support to the monthly resistance and weekly resistance above. Actually, not the monthly resistance, the weekly one. A Fibonacci set, and we are now facing the 50% retracement of this full behavior. So I expect at this point I don't expect any other movements from here unless my second target. I need pound trading at the 61.8, the golden ratio. Obviously, sometimes what I need is not what the market will print us. So, but I have my stops adjusted. This is one example of the trade that I took from above. So I shorted the market at the 88% retracement. This was the completion point for the pattern. We have reached the first target, the 38% retracement. As I mentioned here, this is my first target. Half of my initial position size closed, break even my trade. And as soon as the market achieves the 50% retracement, I decided to close another portion of this trade. So I keep remaining, I keep inside this market with a small, tiny position, holding for and waiting for the golden ratio. So I still believe there's room for pound to fall into these levels. Obviously, we have this bearish trend line or this descending trend line now being threat. And the market has violated that trend line, which is not a sign that the market will trade higher, but it can, and it has proven to at this moment to print eventually an outside return. What it means, the market will break it will print an outside candle outside the descending channel, the descending momentum, and then it will recover in the same direction of previously. So, but this is a trade that I have nothing to say more than waiting and managing the trade. So what we have at this moment, let me push just a list of a few charts that I want to share with you. We have euro versus pound. We have also a few not versus pound, versus yen. We have a few yen pairs trading, and I need to decrease my time frame in what I consider as a completion points or very close to completion points for harmonics. One of them is this one, this euro versus yen. As we can see here, I've shared this shark pattern at 224 extension. The market has printed a new resistance above the completion point, and then it started to fall. And from below, I identified yesterday the possibility to print two shark patterns. One of them at 1618 extension, completely ignored. The market has violated these previous structure highs, the previous structure resistance, printed new highs, and then it has violated the 224 extension, but it's now trying to, well, at least it's now falling from this level. Based on Fibonacci levels, and if we set retracement from the previous, the 4 hours support level to the most recent highs, we are now approaching, not approaching, but a few points above the 38% retracement. So the minimum expectation for this pattern is the 50% retracement. So that said, I will not be surprised to see Euro versus yen retesting this virtual, and I call it virtual because it's not so common. I was expecting this channel to be respected with the formation of one eventual edge and shoulders, but the market has violated this structure, has printed a new high. So I will not be surprised to see dollar versus yen falling into this, to the default level, to the 50% retracement. We have also the 200 moving average approaching from the, or pointing to that level. So if that happens, it will print us the 5-0 pattern as usual, which may offer also an opportunity to go long from these lows. So if the market decides to bounce from this level, it can eventually retest the highs again, and then, or to form kind of a double top eventually at these levels and then resume below. So shark pattern, default target at 50% retracement, not the most perfect one. The market failed to the completion point, to nail the completion point and to fall from there, but it's what we have at this point. On NOK, and let me try to push that chart here. NOK, I was expecting the market yesterday to trade, or this week to trade a few points higher, or a few points above the most recent top. So I was expecting the formation of the shark pattern at the 1618 extension, 8.73. So this was my expectation. It is possible to see the formation of that pattern after this pullback, after this relief. I will not be surprised to see dollar versus NOK printing new highs and eventually trading, retesting the weekly and the monthly resistance above. But at the same point, obviously, we need to violate the structure first in order to increase those probabilities. So now we have resistance at 8.72. So breaking that level will increase the probability to trade higher. The formation of the pattern still a possibility. We need to observe the market conditions once the price approaches those levels. If somehow the market offers some bearish divergence, it can print another relief before trading higher. So I was expecting, and sometimes we expect, and the market will not print those expectations, but I was expecting the formation of the shark at 1618 extension, still a valid pattern. And obviously for those who are familiar with those patterns, it's a pattern that can also be formed at 224 extension, and for that to happen, it needs to violate all these weekly and monthly resistance above 8.82. So this is the limits, let's say, for bears to remain into a bearish momentum here. I believe trading above these highs, the market can complete this pattern above the 224 extension, print some relief. It's a shark. The shark, as usual, will offer a relief and then a new bounce with the completion point of the bullish 5-0 pattern. So every time we see a shark pattern, and if the pattern starts to work, obviously, it may offer us an opportunity to trade the 5-0 sequence. So what this means, we have a bearish opportunity which may end up forming a bullish opportunity at the complete targets once the market achieves targets. So at this point, I need to wait for those. One of the patterns that I'm trading I'm also inside this Mexican peso, similar as Blake. I entered the trade a few points below the few points below the entry point from Blake. So Blake waited for the breakout of this flag, of this triangle here, to engage the market. I waited for the breakout of the triangle below. So I entered the trade, actually, let's say below the daily resistance, a few points below the daily resistance. When I saw the market breaking these levels, I re-entered the trade because I shared one of my entries I shared among the Forex community. Then I jump out from that trade as soon as the market starts to approach the bottom again. Note that what we have here is also a technical double bottom validated at this point with a broken neck. So we have a neck zone here at 1925. This is the neck zone. The market has decided to violate the neck zone, retested the neck zone with support from the 200 moving average also. So we have all the conditions there to see this bullish shark pattern working. And as mentioned by Blake, this is my minimum expectation. 1955 is my default target. Every time I enter the market, I trade for the 38% retracement. By default, the shark pattern will search for the 50% retracement. By default, I trade the 38% retracement because it helps me to manage my position, but the default target for that pattern is the 50% retracement. This one specific trade setup, I prefer the 38% retracement because, as mentioned by Blake, is synced with previous structure support. It's now potential resistance. So 38% retracement on Mexican peso is my minimum expectation. And from here, the process is always the same. Cut your position, start to partition your position. I decide to close half of my initial position. So if I enter with one lot, I close half of that lot. I remain with that position. And as soon as the market achieves the 50% retracement, I can keep partitioning my position, and I will trail this position with the dynamic stop above the golden ratio. So if the market touches the golden ratio, I close another portion of my position. I keep one last portion. I adjust my position and my stop losses at profit with a dynamic or a trailing stop behind. This is my suggestion in order to manage this position. So that said, following the idea from Blake, if the market decides to trade higher and break these monthly and weekly resistance, I will trail, and with a dynamic trailing stop behind, I will try to trail that position. So this is Mexican peso. Let's move to another one, and I will try to be. Do you have an interview, Dale? I believe we have. This is once you are here, just let me know, Dale. 2 hours time frame chart. I published this chart yesterday. The eventual one eventual shark pattern at 224 extension 111.28 is my not my target, but it's the level where the pattern will complete. We never know if the pattern will, if the price will respect the pattern or not, but this is the next pressure level where I will search for eventual reliefs on dollar versus yen. Note that we have also kind of inverted edging shoulders below with a default projection just a few points above the default completion point for this shark pattern. So what I mean, as soon as the market gets that level, achieves the 224 extension, we use a retracement tool from the daily support to those highs. So let's imagine the market will print the 224 extension shark pattern, and from here we expect a minimum of 38% retracement, and this is my opinion, because as I said before, the default target for the pattern is positioned at 50% retracement, which is synced with this previous daily and 4 hours resistance price level. But I always prefer start to manage my position at 38% retracement. So from here, everything can happen. If you start to see the market bouncing from here, an outside return and then new lows eventually, or a retest of the highs and new highs above will not be surprising. So that said, I always use the 38% retracement as my first level for targets. Dollar versus yen, bearish sharp pattern, 111.28. Aussie versus yen, and I cover a few of those yen pairs because they are trading in price levels that I consider as strong price levels. The Australian dollar, actually, I want to share with you some of those patterns that the market has printed here. So we have these.
Yeah, take your time, Andre. The guest Vince isn't in the room yet, so just take your time. Nice presentation, by the way.
Thank you. Let's see if some of those will work or not. We never know, no? So this was the shark pattern at 161.8 extension. Actually, let me put that level here. I need the 161.8 extension here. So I shared, as soon as the price approaches this level, I shared the possibility for the price to print a relief here. So the market has failed that relief, and then it has printed new highs above. I believe this, and Dale can confirm this better than me. I believe we are talking about a potential 3 drives pattern above. It was forged at divergence, so the market has decided to violate all this structure and producing this major and fantastic fall below this 3 drives pattern. Now we are threatening the daily resistance, which it was printed at 78.83. Golden ratio is just a few points above, acting as potential resistance level. We have no harmonics at this point, no advanced patterns based on the most recent price behavior, but it's always an interesting price level, a golden ratio position at the daily resistance. Note that we are, in order to keep trading lower, we need the price to violate a double trend line, why I call it a double trend line, because as soon as the market violates these highs, a new trend line has been established. What I mean is we have a first trend line between those lows, connecting those lows, and then the market has, so this low was formed inside a consolidation period. So this is a small sideways period. This is a 2 hours time frame chart, by the way. And then the market has violated those highs. So as soon as the market violates those highs, it has started to print a new structure above. So what we mean is that we have a new trend line between this most recent low and the next one. So we have this bullish trend line connecting all those candles below as support level. And in order to trade below those levels, we need to break. First things first, we need to break this level, this ascending trend line. We need to break also the 200 moving average approaching from below. And if that happens, I will not be surprised to see a retest of this daily support again. For that to happen, we have also this trend line, this ascending trend line, connecting those bottoms, and retesting that level can also produce some interesting market behaviors. Until there, we need to wait. I need to wait for the market to develop in some type of harmonic pattern. Until there, I have nothing rather than the golden ratio for now, acting as a potential resistance level. Very similar as previous one. So the price has respected this level quite a few times as resistance and support. It's resistance again, so I will not be admired to see relief on Aussie versus CAD, Aussie versus yen. CAD versus yen, Blake has pushed this pattern already for our subscribers. We are trading inside a bearish bat pattern, but at this point, I'm not so sure if if the price will not print a new higher high. The reason why I'm saying this is because I feel I see some type of hidden divergence information. So what I mean, we can see the strength or the relative strength index. It's approaching the previous bottoms, and the price is rejecting to go there. So the price is rejecting to follow the. So sure. It's here already.
I just want to see. Okay, I'm looking. Vincent, I don't see you in the house. You're still having trouble getting in. Send me a question, please, while Andre's continuing. Go ahead, buddy.
Okay. Yeah, I'm just a few more charts to
okay.
To share. This one it was a very fast movement on Euro versus New Zealand. I shared also this eventual sharp pattern at 224 extension. The market has reacted very well. We need to wait when we are now approaching what we may consider as a bullish bat pattern completion point. So the market has retested that those lows below 88% retracement is being now rejected, and this forms also a bullish bat pattern here. So we have one first behavior, one first impulse wave, a relief, a retest of the highs, and the 88% retracement below. So this is the default level for the bullish bat pattern. So at 88% retracement. From this point, we measure a retracement from the previous structure highs to the most recent bottom, and we expect. Sorry,
Blake, excuse me, it's all right. Blake or Andre, do you have a good link to get in? My guests keep saying the meeting will begin when the organizer arrives. So the link that we put out on Twitter is not working for him. Anyone out there have a good link for me to send to him?
Let me try. Can you join from our website? I believe you can click.
Okay, let me tell him that. All right. Yeah, anyway, Velu and Ziggy, the links that you're using aren't the correct one. I've run into this a few times because I usually just use that for our guests. Okay, so anyway, he just said he's going to reschedule. So is that a wrap? Are you going to wrap it up?
Yeah, just finishing. So just finishing. This is Euro versus New Zealand. I expect.
Yeah, sorry, I apologize for the mix-up, but
no problem. For me, there's no problem at all.
Okay.
So I still expect this. I always expect a pattern to work. I have no reasons to doubt about that. But this is the bat pattern. I expect the pattern to trade at 38% retracement. This is the minimum expectation for the bat pattern on Euro versus New Zealand. Finishing with, I will finish with Dixie, silver and oil. Very fast. Dixie. Let me close this window here. Dixie is also pushing eventually into new highs. I was expecting. I shared this eventual bearish pattern yesterday among the community. I still expect the market to trade a few points above. It's 97.41 is the completion point for the bearish bat pattern. From there, I will expect a 38% retracement, a minimum expectation for this pattern at 96.50. So this is the default target for the bat pattern. So dollar index, if they decide to threat the previous resistance level, the previous highs, it will offer us for sure a friendly risk reward opportunity to try shorts on Dixie. Obviously, bearish pattern at 88% retracement. out-bat pattern at 113 extension. So if there's an objective to print a new high above the previous ones, so there's the 113 extension. If the bat pattern fails you, and this is something that I share among the communities for a while, if the bat pattern fails you, and if it fails at 88% retracement, and if it fails at 113 extension, eventually we will see the Dixie extending into the 168 extension, and if so, and if the market offers conditions, this is the crab pattern at 168 extension. But from there we will see, and I will try to keep updating those charts if that happens. At this point we are very close to the 88% retracement on Dixie. 97.41 is the completion point for this, the bearish bat pattern. And let me finish with silver. Another trade setup that I took earlier, yes. And this is
near the high.
Yeah, near the high at the completion point. As you can see, the market has nailed the completion point at 224 extension, Fibonacci extension. So it has printed the daily and the weekly resistance above, and it's now adding into, well, the default target for the pattern at 50% retracement. 200 moving average pointing between the 38 and the 50% retracement, weekly support between those levels too. So I will not be surprised at a minimum of 38% retracement in order to respect this previous structure support level, in order to keep trading above this level at 1531. So this is my minimum expectation for silver. It needs to violate this ascending structure trend line now being threat, and it needs to violate this trend line. It needs to find some support. It will find some support eventually at 200 moving average. And then we have this major, eventual measure. At this point, it's still the virtual trend line below, connecting those bottoms, which may also offer some pressure if the price decides to approach those levels. It's too soon to predict that. Minimum expectations, 38% retracement. We are now facing the very first Fibonacci level at 23% extension, retracement, I'm sorry. So it's synced with the most recent support levels. And as I said before, when I published today this chart on Inside ForexAnalytix, we are 1, 2, 3, 4, 5 days in a row trading in the range between the 4 hours resistance and the daily support and 4 hour support. So we are now moving sideways, trade below or trade above it. And to finish, Dale, with oil, just to finish. Let me try to push I'm not sure if it was a daily, no, it was a 4 hours time frame, I believe. So from here, we are also approaching a bearish scenario, a possible scenario. So I shared these golden, let's call it the golden shark pattern at 168 extension. The market has nailed that level. It has printed a new daily resistance above, a few points above, traded the 38% retracement from all these bearish momentum. So all this bearish behavior, the market has nailed the 38% retracement. I'm trying to show you the highs. So we have the weekly and monthly resistance above, and we have the most recent major support below, the weekly and monthly support. So a retracement from all these levels, and the market has touched the 38% retracement here. It's not so clear. Let me try to change the color here just to show you. So the market has nailed the 38% retracement at confluence with that shark pattern above. Mm-hmm. Okay, so and here, and from here the market has decided to fall. It has achieved a target straight beyond those targets, and it has completed another shark pattern. The 168 extension, it works very, very well as a reversal Fibonacci level, not only for harmonic trading, but specifically in general, it works very well for reversal. And as you can see here, the market has respected that level also. So a new low below the completion point and it's a fast bounce. And it's now approaching again the 168 extension. At this point, it's a completion point, very similar as any other, and we already know the market can extend to the 224 extension. So at this point, we have two options. One of them, a short with this sharp pattern at 168 extension in order to remain below the previous highs, or a retest of the previous resistance, 224 extension, which will offer for sure a friendly risk-reward opportunity for those who are searching for shorts on oil. 224 extension, and from there we expect, as always, a minimum of 38% retracement or a default target at 50% retracement. It's a default target for the sharp pattern. So at this point we are approaching. Actually, the market has nailed the 168 extension already. Let me check. I was not following this.
That was a week ago, last Monday.
Yeah,
got up.
This.
Oh, that one. Yeah.
No, this one has nailed the 168 extension, and the market has already produced some relief here. Let me just measure this relief, because if the market has nailed the 38% retracement here, and it has started to bounce from here, which is not a good sign when we are trading in a bullish momentum. If the market decides to pull back, to print a relief and to find some support at the 38% retracement, it may eventually print some. It may search for that 224 extension above eventually, but again, we need to break above this level in order to increase that probability. At this point, we have the sharp pattern printed, 38% retracement already reached here. It can happen. We can see the market falling again without breaking these highs, the most recent highs. So I will not be surprised with that. But we have two levels to search for those completion points: 168 extension and the 224 extension above. So and that resumes what's happening during these trading sessions most recently. So let's say other markets are moving sideways, very choppy markets, nothing actually being printed significantly that improves the probabilities to, at least that allows me to engage the market or to participate or to get involved with. So there's nothing specific. So Dale, this resumes my daily approach for today.
What a great rundown, and excellent looks, Andre. We didn't miss a beat with you here today. Thank you so much for your team spirit of coming in here and doing more than just filling in, but adding on to what we do here at ForexAnalytix. So love your work, man. You know, I paid attention and it helped me, and I'm sure listeners and viewers are going to feel the same way. So thank you, my trading warrior brother. So no guests today. I'll be with Kirk Spano tomorrow to talk oil and see what kind of ideas Kirk has, as long as it's a great segue with Andre wrapping it here with WTI. So enjoy the rest of your day, everybody. Thank you for hanging out with us. And remember, what should you remember? Go ahead, write it down. Don't just, Andre, say the tagline.
Oh, don't just count your pips, count your blessings.
Beautiful. Adios, everyone. Thank you so much, Andre. See you guys tomorrow. You're welcome, Alina, Forex Gal, Hammett, all our community F.A.C.E members. Have a great day, and we'll see you tomorrow. Adios.